What's up guys, it's Gerald here. In this video I'm going to go over PayPal and how I was able to make over $35,000 within the span of a couple of weeks. So my investment case was with PayPal, and let's go over PayPal both fundamentally and technically. So I have PayPal is a tech company. They enable digital payments in the digital payments sector. Pretty much serves in the behalf of merchants and consumers worldwide. If anyone knows about or anyone is in the game of e-commerce, everybody knows what PayPal is, right? It's a huge player in the e-commerce space. So just on the overview of PayPal's basic financials, we have a revenue of $90.75 billion. I'm going to be comparing this both historically, and we're going to see how this is trending over time. I'm going to be looking at its PE ratio of 15.03 and how it compares to history as well as competitors. It has a cash flow to debt of 0.75. Typically, you want something around 0.5. 0.75 cash flow to debt is extremely good, right? And let's go, when I'm doing my fundamental analysis, I want to understand both the advantages as well as the risks with a certain company and try to gauge if the risks are sort of priced in or it's valid. So in terms of its competitive advantage, like I said before, it is a dominant player in the e-commerce space, right? PayPal is a global leader in digital payments, renowned for pioneering the online payment landscape. It has an extensive user base of over 400 million active users. They have a strong brand equity, right? So let's go over the risks. And number one is its competitive market landscape. And it's actually one of the biggest reasons that people sort of say that PayPal is a value trap, right? The online sector is highly competitive. There's major players like Apple Pay, Google Wallet, there's Visa, MasterCard, Square, and so forth, right? This is all sort of competition that PayPal has to pretty much fend against, right? I'm gonna show you guys why this sort of reasoning is not as valid as many people sort of make it believe, right? Next is its dependence on e-commerce growth, right? PayPal's performance is closely tied to the health of global e-commerce industry, right? Any downturn in the online shopping could significantly affect its revenue streams. So looking at the company's financials, I want to look at the company's revenue. You can see pretty much quarter over quarter, year over year, the company is in an uptrend in terms of its revenue, right? It's trading at essentially record revenue, but trading at 52-week lows, right? I'm looking at its return on assets, right? Some of its profitability metrics. It boasts a return on assets of 5.21%, which is higher than the 5-year median, right? Of 4.93. Let's look at a return on equity of nearly 21%, which is excellent, right? Its median over the last 5 years is 17%. Its return on capital employed is 16.26%, which is significantly above its 12.80% median for the last 5 years. Its return on invested capital is 17.77%, where its median is 12.91%, all higher than the median, right? So this company exhibits very strong profitability metrics, right? So essentially we have a company that is functioning very efficiently and essentially knows what to do with the capital and pretty much is a high free cash flow company. Let's look at its balance sheet. So just overall, PayPal has assets of $83.35 billion compared to liabilities of $62.65 billion. The things I like to look at are its cash, right? The company boasts a cash of $14.31 billion. In terms of its long-term debt, it's $9.68 billion. Very healthy balance sheet. If I'm looking at the shares outstanding, everybody knows that PayPal has a massive buyback program. And with that massive buyback program, trading at essentially 52-week lows with new management pretty much reinvigorating growth into the company, they are going to be purchasing large amount of shares at these prices. And as you can see from the shares outstanding chart, we are in a steep downtrend in its shares outstanding. The company is buying massive amounts of its shares back. So now I want to take a look into its valuation multiples. PayPal is trading at a PE ratio of essentially 15 compared to the median of 51.76, right? We are below all historical PE ratios. We also have an enterprise value to EBITDA of 10.41 when the median is 33.03. The lower the EV to EBITDA, the better. And with a 10.41 EV to EBITDA, I am very, very bullish on sort of whether this company is undervalued or overvalued. Other things I want to take a look at are the hedge funds, right? The 13F filings for the last quarter. As you can see here, this is hedgefollow.com. I'm looking at all the major hedge funds sort of purchasing PayPal, whether they're selling or they're buying large amount of shares with PayPal. You can see the top 4, these are major holders in PayPal, haven't really changed their positions here. But I want you guys to take a look at these individuals right over here. You're seeing Southeastern Asset Management, Mason Hawkins, acquire nearly 60 million shares of PayPal, right? They increased their amount of shares by over 5,000%. They have an average price of 64.17. We have Coatue Management, Philip Lafont, nearly 539 million, increased his shares by nearly 30,000, down in his position at 64.29%. We have .72 Asset Management, Stephen Cohen, 316 million shares of PayPal, increasing his shares by a whopping 825%. They have an average price of 63.82. Paul Tudor Jones, everyone pretty much understands, anyone in the investing landscape knows the name Paul Tudor Jones. He started a position with PayPal, 60 million. He's down his position at 64.2, right? Other huge people, Ray Dalio, Ken Griffin, you can see increase their positions significantly in PayPal. You can see their average prices are way below what PayPal was trading at previously, which is what allowed me to have the confidence to allocate a large amount of money into PayPal. So overall, with PayPal, we have cost-cutting measures that have been already implemented with the new management. There's a shift in their core businesses with Braintree, their branded checkout. They have a free cash flow of $5 billion a year. This is a free cash flow machine. It had a debt-equity ratio of 0.47. Remember, 1.0 or under is good. A debt-to-equity ratio of 0.47 is excellent. It is a very healthy balance sheet. In terms of its PE ratio of 15.11, I'm comparing this to its competitors. We've already compared it to its historical averages. It's way below its own historical averages, but let's take a look at its competitors. Block, PE ratio of 90, Adyen of 54. So this is a company that is trading way below its historical averages as well as way below its competitors. This company has a massive buyback program of 15 billion, right? And like I said, with the new CEO, it's reinvigorating growth into the company. They're using other ways to inspire that growth, which is monetization of their Venmo, as well as the news of their ads business, right? This is going to take time, but it's going to essentially increase their profit margins and overall just revenue, right? Ads, if anyone understands anything about the ads business, it is a very high margin business. So after taking a look at the fundamentals, and we've deemed this company to be extremely strong, and I believe that this company is undervalued, I want to take a look at the chart. So let's hop into TradingView. So as you can see here, I have PayPal. You can see sort of my chart. We were sort of trading in an uptrend, right? I like to mark out my uptrend. I like to mark out my tops as well as mark out my lower, right? It gives me good sort of resistance zones as well as potential demand zones, right? If it aligns with the demand zone, if it aligns with the support area, that will give me a strong conviction on where to enter into with PayPal. So as you can see here, currently trading on an uptrend, previously trading on an uptrend, broke through it. We had sort of bearish momentum. We were currently trading below the 200 moving average, and then we saw support roughly around this 57 area, right, which aligned with prior demand. I then saw PayPal have a break of structure, broke this downtrend, and essentially make higher highs and higher lows. From then, we had a high of around 62, and I essentially expected a rebound around the 200 moving average. If anyone understands anything about the 200 moving average, it is a very strong technical indicator. It is usually used by a lot of technical traders and just overall traders on where a stock will likely find support and bounce off from. Obviously, from this candle, I expected the stock to make a rebound. So I allocated a certain amount of my position, specifically around 40 to 50% of my position around this price, around the 60.82. After that, we broke below the 200 moving average, was extremely bearish, right? But like I said, the market always wants to hunt stop losses. They know where the majority of traders essentially have their buys, essentially have their stop losses as well. And I understand that. So instead of selling out position after a break of the 200 moving average, I essentially dollar costed average at the next area of demand, right? So after I saw a rejection around the 200 moving average, we had strong movement to the downside. Essentially, from here to here, went down nearly about 5%, over 5% actually. From here, after this candle, we saw a print of support. Once again, at the prior area of demand, sitting essentially at the Fibonacci area as well. You can see the 0.618 Fibonacci is trading roughly around 57.96. Once we got around that area, we found support around that Fibonacci. This was the candle that pretty much gave me a lot of confidence into the position, and I essentially dollar costed average into PayPal here. This was a position leading up into earnings. This was the day prior to earnings. For me, I've already done the fundamental analysis with PayPal. I understand the stock is just trading way below its intrinsic value, just way below on any sort of technical time frame in terms of fair value for the stock on a technical basis. It should be trading around 120. It eventually capitulated everyone out of there. So once we sort of traded way below here, I knew that if I just played the long game, I was going to come out successful, right? So no matter what happened after earnings, whether we had a drop or whether we rose up, it didn't matter necessarily to me because I had buy targets on the downside. And of course, once we found that support around the 0.618 Fibonacci and prior area of demand, trading very far away from the moving average, from that earnings, we had a very bullish gap up in the stock. And essentially, I was able to profit over 4 or 5% on this position. All right, guys, so that's my breakdown of PayPal. Hopefully that was helpful for you guys. If you guys enjoy this content, please leave a like, comment, and subscribe. I truly do appreciate it. And as always, happy trading.